Stocks swing in a range as fresh global uncertainties and mixed earnings cloud the outlook. Metals and IT gain while auto and financials drag.
The Supreme Court ruling against any AGR relief, the future of voter idea and the centre's three-player market stance come into question. The ball is now in the government's court.
DLF builds on gains following a strong quarter of bookings and collections. Burger King franchisee restaurant brand Asia jumps on strong India show, and NLC India climbs on its power segment ramp up, but DOM slides on slowing growth.
American economist Paul Krugman tells CNBC TV18 the Moody's rating downgrade shows that faith in America is shaken. He adds that the tax cuts in the budget bill will blow up the already unsustainable deficit. He sees no trade impact on India, even as China gains at the cost of America. Good afternoon. You're watching us here on Halftime Report. I'm Mangala Malu. With me, Vinny Motiwala. We come to you live from the CNBC TV18 Motilal Oswal studio. It's a day of mild declines that we're seeing on the frontline indices. We've been consolidating from levels of around the 25,000 on the Nifty for a while now. Today is the Nifty Bank, which is underperforming after outperforming yesterday. And guess what's outperforming as against underperforming yesterday is the Nifty IT index. So that tells you that, it is just things pulling in different direction while the market goes nowhere, consolidates in this 150-point band around that 25,000 mark. Hi, Vinny.
Hi Mangalam, good afternoon. But what I'm also watching out for today, the mid and small cap today is not participating, right? Yesterday as well as last week, that was outperforming. Now today, that's not what we're seeing coming into the trading session. Mid cap was down 0.5% as well. Small cap down almost 0.1%. So that's something to watch out for. Other than that, metals, like we said in the headline as well, Nifty metals is shining bright, 0.5% of gain there. Sectoral loser, we have autos, media's not managing to hold on to gain as well, and financial services, also a bit of a weak performance there. But let's get started with the show and on to a big exclusive that we have on CNBC TV18. My colleague Parikshit actually spoke to the American economist and Nobel literature Paul Krugman on Trump's trade tariffs and how it has had an effect on U.S. economy. Listen in.
It's really hard to see the tariffs in the hard data. It takes time for them to show through, but we're likely to see a bump in consumer prices starting within weeks. So the inflationary impact of the tariffs is coming. You can see already that businesses have scaled back a lot of expansion plans, not simply because of the tariffs, but because of the uncertainty. If you ask me, what will tariff rates be 120 days from now? Nobody has any idea. And that includes Donald Trump. That includes his Treasury Secretary. And businesses are reluctant to make plans, to make investments on that basis. So, yeah, I think we're probably now maybe slightly down, but still maybe 50% chance of a recession, but certainly an economic slowdown, certainly a bump up in the inflation rate. It's stagflation. Maybe it's stagflation light, but we're definitely heading for some kind of stagflation.
Right. Could you give us a sense of your outlook for the U.S. economy for the full year 2025 as a result of Trump's policies? You're saying that there is a 50% chance of a recession. And what could be some of the contours of the stagflation, according to you?
Well, okay. A sort of best guess is that we'll have little to no growth for the year. Maybe slightly positive, maybe slightly negative. If it's slightly negative, we'll call it a recession. If it's slightly positive, we won't. But from the point of view of how it feels to people, it'll be the same thing. Probably higher, almost surely higher unemployment, and quite surely higher inflation. Even with this very modest step back in the tariffs, tariffs are going to probably add 2% or something to the consumer price index over the course of the year.
What do you think Donald Trump's tariff policies and some of his trade deals will do to the long-term confidence in the America story? Do you think Donald Trump will be able to make corrections in the next few months, or do you feel what he has done is going to shake investor confidence in the long term?
What country will ever really take us seriously when we make promises. What business is going to make plans on the basis that whatever the current policy is something you can be relied on to continue? So no, we don't undo this. It'll take many years of responsible government, which we see no sign of happening anytime soon, many years of responsible government to get back to where we were 4 months ago.
That all of this, his criticism of certain policies of companies, all of this is going to slow down the capex cycle, because companies will be like, hey, we don't want to invest anymore. We don't know what's happening at the White House, when policies may change. Let's not put up additional capacity. Let's not make fresh investments. And do you think this could lead to reduction in job growth as well in the US?
Oh, yeah. The recession risk for the United States largely comes from not even from the tariffs exactly, but from the uncertainty. I mean, if Trump just announced 10% tariffs on everybody forever, and people believed him, that would be raise the cost of living, but probably businesses would start investing on that basis. If he keeps on announcing, well, whatever I said about tariffs yesterday, now I've completely changed, and the new tariff rate is good for 90 days. And by the way, whatever business decision you make, I may go out and denounce you and take revenge. A lot of companies are. You can just start to see it in the actual announcements, but there's truly a lot more of, hey, the safest thing to do, maybe the only safe thing to do, is to sit on cash. Don't stick your neck out. Any investment you make runs a substantial chance of being completely wasted money because policy just did a 180-degree turn before the investment had a chance to mature.
Fair point there, and expert commentary coming in from Paul Krugman, speaking about the uncertainty and the kind of impact that has on decision-making for the corporates and investments. But he also spoke about the Moody's downgrade of U.S. credit rating and did have some strong words to say about that as well, saying that the U.S. does not look like a country which can be trusted to do the right thing. Listen in.
One thing that you do need to say is that if a rating agency downgrades a corporation's bonds, I take that very seriously because I suspect that they know a lot that I don't. When they downgrade a country, they don't know anything that anyone studying macroeconomic data and studying the fiscal situation and so on doesn't know. So in itself, I don't think the Moody's downgrade is particularly informative, except insofar as it's telling you that a lot of people out there are looking at the United States and saying, is this still the America we knew? I mean, America certainly has, we have the resources. Yes, we have a lot of debt, but we have the resources to cope with that, to pay it down. And we've coasted for a long time on the belief that eventually our political system will do the right thing. If you look at the budget bill that appears to be on track to be enacted this week, this does not look like a country that can be trusted to do the right thing. It's a bill that will blow up the deficit with tax cuts when we're already at a basically, long run unsustainable deficit, supposedly paying for that with absolutely savage cuts in aid to people in need, which are probably, even with this government, not sustainable. Millions of people who voted for Donald Trump thinking he was going to make their lives better are about to discover that they have no health care. And this we do not look like a serious country. And how long can we continue to coast on the belief that we will once again become a serious country when the reality is we look less serious by the day?
I'd also like to ask you about the weakening of the dollar. We've seen significant weakening against major currencies like the euro and the yuan and the yen. At the same time, higher volatility in the US bond market and stock markets. What is the trajectory according to you, and what are the big causes for concern?
Well, I spent a lot of my career on financial crises in emerging markets. What's happening in the United States looks like a sort of very low-key, but nonetheless qualitatively similar thing. It really does look like we're getting a bit of a sell America trade, as if people are losing confidence in the United States losing confidence in the dollar. Tariffs normally make your currency stronger because you buy fewer imports and so less demand for foreign currency. Instead, the dollar has gotten weaker. And I look and say, well, I think I've seen this movie before. Now, it's a very pale shadow of what we've seen before. The weakening of the dollar by a few percent does not look like the 80% fall in the Indonesian rupiah in 1998, but it does have, it rhymes a little bit with what we've seen before. And again, incredible that that's happening here in the United States.
On the beautiful tax bill that was set to come, as Donald Trump called it, it has been stalled for the moment, but many say that it's not completely off the hook and it may still pass the legislative process. This could increase the US debt by at least 3 trillion to 5 trillion US dollars. How do you see this tax bill that would extend the major tax cuts to different taxpayers? Who is this going to benefit, and do you think this will go through the US Congress?
I think it will go through. Actually, apparently the committee hurdle that held it up last week was crossed late last night. So this probably is going to go through, unless they're rushing it. It's kind of a bum's rush, because if the public got any wind of what's in it, it probably would fail. And the reason is not the tax cuts, not the deficits, although it is bad. It's clear, this is why Moody's downgraded, because this is highly irresponsible in terms of increased deficits. And in the past, the United States has been able to shrug off worries about the deficit, but maybe that those days are coming to an end. But the savage cuts, I'm seeing something like 15 million people might well lose health care. A lot of people are going to lose nutrition aid. This is just an attempt to partially offset the cost of those tax cuts for the wealthy. They are going to literally ruin the lives of millions of Americans. Many of them are people who voted for Donald Trump. So if this does get enacted, expect a tremendous political backlash, because it's not just a dollars and cents. This is a massive act of cruelty.
Okay, that was an interesting conversation there. But on that note, we're going to slip into a very short break. And after the break, we'll connect with the management of Dodla Dairy to discuss the Q4 numbers. So don't go anywhere.
Welcome back. Let's talk about the dairy stocks. This month, we've seen a decent traction on a lot of these companies' dairy stocks, because milk prices, as season would have it, have seen a bit of an increase. Dodla Dairy up around 2.5% today after recovering from the lows in yesterday's trading session as well. This after their steady showing in the fourth quarter. Seasonally, there has been a decline in their procurement, but that's ahead of lean season itself. So let's get chatting with the management. We do have with us Mr. Sunil Reddy Dodla, who joins in with an outlook on the year that lies ahead. Thanks a lot, sir, for joining in. Mr. Reddy, just wanted to know, from your end, how have milk prices changed in the first quarter? Have you also taken that 1 to 2 rupee per litre sort of price increase? And how has demand fared? What's your outlook for FY26 when it comes to, volume growth, value-added mix, and perhaps margin outlook as well?
So thank you very much for having me on the show. This year has been a good year for us on 25 in terms of our growth, because we have three drivers, which is Africa, India, and our cattle feed. Africa and cattle feed did really well for us. Looking at the margin outlook, the price increases that have been taken by the cooperatives, we had taken it in the last third quarter itself. And we will not see much of sale price increases that we will take, because we've already taken the price increases in the previous quarters. Regarding procurement, I think the monsoons have come in earlier in the southern states, and we are seeing a production increase in the procurement. And we think that the procurement prices will start to cool off a bit, and therefore will help our margin profile as we go forward. For the year coming ahead, the forecast or whatever our guidance would be, we will maintain similar CAGR levels that what we have been doing as the past years. This year has been an exceptionally good year in terms of growth, because the acquisition that we did in Kenya has panned out really well and gave a significant boost. But otherwise, we will maintain steady state of growth and profitability growth.
What would that be in terms of quantifiable numbers?
We normally do around double-digit growth in terms of volume, the lower double digits, and in terms of revenue, we do mid double digits. That's where we'll be at. Around 15% revenue growth rates is what we will be at.
Okay, 15% revenue growth rates. Afternoon, Mr. Reddy. This is Vinny joining in the conversation. You did touch upon in terms of the margin. So I just wanted to know a number in terms of margins. What are we expecting there? This 27 to 30% in that range is what is the expectation?
The gross margin levels of what you're looking, yes, they will be in the similar lines, Vinit, in terms of what we do. Maybe marginal difference of 0.5%, 1%, depending on when the season comes in and earlier or later. But gross margins will be in the similar trends of what we always have. But subject to the three lines that we have of cattle feed, Africa, and Indian operation.
What about, value added? Stays around the 35% mark itself?
Yes, 35% value added, because now we have moved away from the earlier days where we were net buyers of fat and powder, from where we are becoming net sellers. That's what we have been doing by and also keeping future in mind. We are establishing a significantly large presence in Maharashtra, which will further augment this. So we will be at the same levels.
Okay, just a word in terms of overall your market share as well among your private players, and how is that panning out? Earlier, I think you had spoken about a market share of 1 to 2% in Tamil Nadu. I just want to understand what's your outlook for FY26?
Basically, market shares are remaining status quo. We're only getting our market, whatever the market growth is, we're all continuing to keep the growth in similar lines of what we are holding on to our market shares. I think the consolidation has already begun. So the players are now becoming well-established players, 5, 6 players in a market, and each one holding on to the market shares. And I think a slight realignment is what is there. But otherwise, we're continuing with the growth of the demand and continuing with the same market shares.
How long before you get to 20 lakh litres per day procurement? Last year was close to 16, 17.
Basically, last year, what we did was we moved away from whatever little bit of third party also that were there. We didn't procure anything. We procured 100% only from us. Although the growth in terms of numbers domestically show the same number, we had actually grown our own procurement by 1 lakh and a half litres. Now, in the progress for our 20 lakh litres at a consolidated level, I think in India, we will be doing another 2 lakh or 2.5 lakh litres of growth, which from the 17 lakh litres of consolidation will make us to 18.5 or 19 lakh litres there. And also Africa will continue to grow. That's how we are targeting to see our 20 lakh litres per day average coming in for the current year.
Mr. Reddy, what about the purchase of 61 acres of land, I think that was there for the dairy business, and a 12-acre land as well in Maharashtra. So what is the timeline for this? When will we start seeing the synergies coming in from this front?
This front, actually, from Maharashtra, base of operation, we look at it as end of 27. We would like to do it earlier, but we will take it as 27 as an operating year for us to come in. But we're already preparing ground for that. We're enhancing our procurement so that the day when we start the Maharashtra operation, we will not start from zero, but we will have at least a significant amount of milk to start with. Currently, we are already procuring 2.5 lakh litres in Maharashtra. We will keep enhancing that to grow. Maharashtra will come into us purely as 27 as a location and a plant. But this growth in terms of procurement otherwise will continue.
So then what happens to your revenue mix? Currently, it's about what, 35 Andhra, 40 Karnataka, 25 between Tamil Nadu and Telangana.
Telangana is not much, but we will normally try to make it 4 in terms of Tamil Nadu, Karnataka, Maharashtra, and AP. We'll all have the 25 percentage is what we will approximately be at.
Okay, let's talk about Africa and Orga Feed. Orga Feed did what, 130 crores in last year with EBITDA of close to 20 crores. So what's the target for FY26 and steady state growth here? Also, Kenya and Uganda, which is currently 10% of your revenues, has that become margin accretive to your business?
Basically, Kenya, the Africa business between Kenya and Uganda is significantly, largely very good in terms of return on capital that it gives. For a small capital, we almost have an 80% return on capital that comes in from that business. But also, it will maintain the same 10 to 11% in terms of the overall pie for us, because the India business continues to grow and along with the Africa business grows. This year, Africa has done exceptionally well in terms of the acquisition that we did in Kenya. We went and got volume, and therefore we got significantly large volume. Coming to Orga Feed, that 130 crores, we think will come to close to 200 crores in the current year of operations. So that kind of growth is what we will see, because the new plant that we operated came into effect last year fully. And I think we've already reached around 40-45% of capacity utilization of the new plant, what we're operating. And I think it only caters to around 30% of our farmer base. So as we continue to grow our procurement, cattle feed will continue to grow, and we will be doing well with that too.
I wanted to know, out of curiosity, whether you've seen some of the other cooperatives who've got onto this protein bandwagon. They've come out with an entire line of products. Unfortunately, supply hasn't met the kind of promise that the demand has generated and the marketing has generated. So are you looking at categories beyond the traditional value-added categories?
I think protein is something which, traditional or modern, maybe a slight variant, but I could still call my paneer as a protein variant category by educating the consumer about how much of protein is available in paneer. So I think it's it's not going to be specifically in terms of saying high protein or a protein bar. Even by just explaining to the consumer what is available as protein in milk itself will be our way that we will go ahead. Because I think although we are looking at protein in terms of the consumption, it will still be a little bit of a niche product that will be there for a while, because before it filters down to the bottom of the pyramid, right now it will be at the top of the pyramid. That is where we will come to. We will sort of bolster our existing products with more in terms of the paneer content in it. Sorry.
And is ice cream on your mind?
Pardon?
Is ice cream on your mind at some point?
Yeah, ice cream is also there, which what we are doing. But let's say that moving more into the kulfis, which contain more milk than regular ice cream, would be a focus area, which will also then mean more protein in the product.
So by when do you announce a foray here? What's your product strategy?
Already into the ice cream. We are doing already ice cream. We do a small volume of ice cream, which we just we've added up the paneer, the kulfi lines also right now with the ice cream. But this year, unfortunately for us, the south of India, the monsoons have come in earlier rather than later. So the summer sales were not as much as that we expected. But as a category, yes, we will also keep putting ice cream. We have doubled our sales in paneer from what it was last year. And also we have doubled our sales in ghee from what it was last year in the consumer space.
Okay, Mr. Reddy, thank you so much for joining with us on the show, giving us an insight in terms of what to expect from the company going forward as well as in terms of new launches. But on that note, we're going to slip into a very short break. After the break, we'll have Sumit Chauhan of Angel One, who will join us to talk to us about trading strategies on the other side. So stay tuned in.
The decline is accelerating a little bit on the frontline index now. The Nifty is down 80 points, and a large part of that has been led by the Nifty Bank all through today's trading session. But some of these auto names also coming in for profit booking. So we have Maruti Suzuki, which is lower. We have Eicher Motors, which is lower. Tata Motors along with Bajaj Auto as well. So the two-wheelers had done well for the last few trading sessions, now coming in for profit booking. And we are also seeing some decline in names like Reliance and Asian Paints. Asian Paints has been under pressure ever since their numbers. In fact, it has been one of the big underperformers of the last year or so, currently at the low point of trade. But if you look at the markets, there is consolidation that we're seeing for the last few trading sessions. Today, the mid-cap index is underperforming as well. So you have the Nifty coming up for you, the Nifty Bank down about 0.4%, and we have the mid-cap index down about 0.5% as well. The advanced decline too split right down the middle, with a few more stocks declining than the number of stocks which are advancing, though the lines are fairly intertwined. Active Nifty options suggest that there is supply above 25,100. That's what the action at the 25,000 call is telling you. But at the lower level, the 24,900 put comes up for you. Continues to see writing at a premium of 130 rupees, telling you 24,750 or thereabouts is an important support to track, especially over the next few trading sessions. For the Nifty Bank, the one level I'll be watching out for will be the 20-day moving average. Bounced back a couple of days ago from this level, and currently 55,000 is where that is. Looking at a couple of stocks, long positions added on DLF, a lot of traction in real estate, post their numbers in particular, and Titagar, which entered the F&O ban a couple of sessions ago, may, by virtue of reduction in open interest today, exit F&O ban. So that's something we'll watch out for too, Vinny.
Absolutely, Mangalam. But let's also bring on board Sumit Chauhan on the technical fronts to understand what are we expecting in terms of levels from the market going forward. Sumit, good afternoon. Thank you so much for joining in with us. Today also we're seeing a bit of a consolidation coming in the market. Yesterday also we'd seen that. Today Nifty down 0.3% below the 25,000 level. I want to understand for the benchmark indices, what are the levels that we should be keeping an eye out on? How important is it going to be if it closes below 25,000? Then what are we expecting?
Good afternoon, Vinny. See, market seems to be following, a typical pattern wherein we see a sharp surge on one day, which would then be followed by some sort of, time-wise consolidation for next couple of days. So we expect, a strong support emerging around 24,800, 24,750, which is 60, 70 points away from current level. So we expect some sort of buying, coming around those levels. So as of now, major indices are clearly lackluster. They are consolidating, wherein the weakest part would be the banking index. Yesterday, we saw a good attempt beyond 55,500, 55,600, but again at higher level, we saw some sort of rejection. So Bank Nifty is the real culprit, but overall, we expect this consolidation to continue, wherein at low level, some sort of buying tends to emerge. And at higher levels, once Nifty again reclaims 25,000, 25,025, then probably we could see the momentum coming in towards say 55, 25, 100 to 25, 150 kind of zone. So overall, for key indices, we expect this consolidation to continue. But yes, stock-specific action is likely to continue. Wherein we like a couple of stocks. One would be from the PSU space. If you see, Coal India has been buzzing since morning. It has already given a decisive breakout. So we expect this move to extend a bit, wherein 428, 430 would be the next levels to watch out for. As a trader, one can buy at current level. Stop can be placed around 403. Apart from this, Supreme Industry has undergone a massive time-wise as well as price-wise correction in last few months. Yesterday, we saw a decisive breakout happening from its recent resistance. Although stock has come off a bit today itself, but we expect buying to emerge at lower levels, and our immediate target would be around 39.50 in case of Supreme Industries. Stop can be placed around 36.40.
All right, Samit, thank you for that. Individual stocks and the indices. With that, we'll sit into a short break, come back, getting more of the markets, and we'll get you our Value Plus segment where we speak about the quick service restaurants.
Welcome to Halftime Report on CNBC TV18. A check in terms of the market. Nifty continues to be below the 25,000 level. 24,864, almost near the day's lowest point is what the Nifty is trading at. But, what's not doing well is also the shipbuilding stocks, railway stocks, which were trending last week. Even yesterday, some bit of a trend was coming in for them. Today, they're not doing well. Cochin Shipyard down 6%. We have RITES. Other than that, Titagarh Rail, Jupiter Wagons, all these also continue to be under pressure. And apart from that, Ircon International, Railtel Corp. So railway clearly is not trending. Some bit of a profit booking maybe, given that we've seen a run-up coming in for these stocks in the last week. So that is something that we're watching out for. But Mangalam, in our value segment, we're going to be talking to us about the QSR side. What's happening there? And pizzas, what are we looking at today?
Burgers, more burgers than pizzas, and this is the two giants that we have. Globally, we had McDonald's and Burger King until Burger King came into India very recently, and now Burger King and McDonald's are pretty much neck and neck when it comes to performance. If you look at the fourth quarter performance, the absolute numbers, if you compare Westlife Food to restaurant brands, India performance, that's Burger King India. Westlife Food obviously is, running McDonald's only in the south and the west part of the country. So it's nearly half the country, and this is the entire country. So to that extent, it's not really an apples to apples comparison, or rather burgers to burgers comparison. But what you can see is that from a listed company standpoint, these are the reported numbers that we have for the India business. Nearly 500 crores per quarter for Burger King India, 600 crores for Westlife Food. Similar EBITDA, margins are a lot better for restaurant brands in the fourth quarter. And if you look at the internals as well, Burger King India across the country have crossed 500 restaurants, 513 to be precise by the end of this year, with same-store sales growth of 5.1%. The same for Westlife Food in the south and western part of the countries. They have 438 outlets, 0.7% is the same-store sales growth. FY25, the revenues for restaurant brands actually crossed that of Westlife Food. 2,500 crores is what they posted, as again 2,492 for Westlife, with slightly lesser margins, but margins for Burger King are improving. The question is, where do they go from here? For Westlife, we do have, a Vision 2027 that the management has given, 4,000 to 4,500 crores in terms of revenue, with 18 to 20% margins, high single-digit same-store sales growth, 580 to 630 restaurants, and they will add 40 to 45 stores annually. On their part, what has restaurant brands said? Burger King India says they will open 60 to 80 new restaurants annually. So that's nearly 50 to 100% more than what McDonald's plans to open. They target 800 restaurants by FY29, and they will see nearly a half to 0.7% increase in gross margins annually over the next 4 years, implying a 200 to 250 basis points improvement in their margins over the next 4 years as well. The question, how much is it for? So for all of this, you look at the valuations. McDonald's currently has a market cap of 11,000 crores. Restaurant brands, after the up move that we've seen today, is 5,000 crores. So McDonald's currently trading at a big premium. Westlife has a 16 times FY27 EV to EBITDA multiple, whereas that of restaurant brands is around 12 times itself. So on a valuation parameter, analysts are preferring restaurant brands if the growth is the same, margins are better, and same-store sales growth is higher with better prospects of restaurant addition. But for all of this, the key risk is slower than expected growth pickup. It could be on virtue of competition. It could be on virtue of competition from other players or online players. It could be a lower than expected store additions or lower than expected growth in existing stores, by virtue of which there would be lower than expected margins. So slower than expected growth pickup is the biggest risk for all these players. But as things stand right now, it's Burger King over McDonald's when it comes to financials and valuations.
Absolutely. Burger King over, McDonald's, Westlife Development is what we're talking about. But let's talk about another stock that has been in focus today, DOMS, that is slipping in trade today after its Q4 numbers. Upasana is joining in with us to tell us why and what is happening with that. Upasana.
Well, the company has reported a steady growth on Y-on-Y basis, but the weakness is seen sequentially. Now, if we look at the numbers on year-on-year basis, the revenue growth stood at 26%, which is much below the street estimates of nearly about 32% growth. EBITDA saw an uptick of 16%. EBITDA margins under pressure down about 140 basis points at 17.4%, and PAT was just up about 9%, again below the street estimates. Gross profit remains steady at 44%. Now, if we look at the numbers sequentially, the revenue growth uptick is just about 1.5%. EBITDA saw just about 0.5% growth. EBITDA margin saw a downtick of 10 basis points, and PAT is also down about 5.5% sequentially. Now, if we look at the company's key segment, that is stationery, which forms nearly 91% of the overall sales mix, the revenue growth here is 14% and margins down as high as 90 basis points, dragging the overall margins of the company. Now, board has also approved an investment of 6 crores to acquire 51% stake in Supertreads Private Limited with an objective to enhance the capabilities in paper stationery segment and also to serve the growing demand in East India is what the company has indicated. Now, talking about the outlook, company has given a cautious outlook. It says that it remains watchful of the external uncertainties and it aims for a double-digit growth for FY26 versus the 24% growth seen in FY25. So there are some concerns in terms of the growth slowdown is what the company has indicated, and we can certainly see the stock under pressure today.
All right, Upasana, thanks a lot for that. We'll take a short break. On the other side, we'll focus on some of the numbers that are likely to come by today. United Spirits is on top of mind. What is the street expecting this time around? The stock's done well so far. What are the expectations? We'll get it to you. Welcome back. Look at India Cements. That stock has now, recovered from the lows currently at the high point of trade. We're also seeing some traction in Pfizer, which continues to move higher, 12% higher on that counter. And Angel One, what a mover it has been. For 24% this month so far. From the lows, it's recovered nearly 47%. So that's a big move that we've seen on Angel One. But BEL reported its fourth quarter numbers. Ria joins in with a management conference call takeaways on what the outlook is. Ria.
Well, yes, BEL reported quite a good set of numbers yesterday. The Q4 numbers were well above our estimates. Even for the full year FY25, they've exceeded the guidance for the revenue. The 15% revenue growth guidance has been exceeded. The EBITDA margin guidance has also been surpassed. Margins have come in at 29% versus about 25% last year, which was an uptick of around 400 basis points. On the order inflow front is where the company fell short of their guidance. The order inflows were at rupees 18,715 crores versus the guidance of rupees 25,000 crores for FY25. But today in the earnings call, they've given their guidance for FY26. Revenue growth is expected at 15% with EBITDA margins of 27%. Going forward, they are expecting a revenue growth of 15 to 17.5% each year over the next 5 years. And export orders for this year are expected at $120 million, which is an uptick of around 15% over the previous year. In terms of order inflows are expected at a minimum of rupees 27,000 crores for this year, but this is X of the QRSAM order. Now, this QRSAM order size is expected at rupees 30,000 crores, and the order is expected to be finalized by the fourth quarter or FY26, or it may actually spill over to the first quarter of FY27 as well. But if this order comes in by the fourth quarter of this year, then the total FY27 order inflows will exceed rupees 57,000 crores for BEL. Now, the emergency procurement order visibility is expected to come in after a week, and they're expecting a minimum of 8 to 10 orders on this front. They're also expecting major orders for subsystems for the S400 going ahead, as well as increased contribution in the BrahMos subsystems. And in terms of the next generation corvettes, the NGCs, they are expecting major orders for subsystems from 2 major shipyards for this as well. So overall, very positive commentary for BEL, and the stock has been recovering off its intraday lows on the back of this.
Thanks so much for that, Ria. But let's move on and talk about United Spirits, Mangalam. That is expected to report its numbers today. What are we expecting this time? What should we watch out for in
Good
terms
numbers
of
that we are
also
expecting. Yes, I'll tell you why. Because, if you look at the stock itself, 32% higher in the last 12 months and trading at around 60 times, so no valuation comfort there. But, if you look at the regulatory environment, you have a policy boost coming in from Andhra. That's what we've seen from numbers coming in from Radico Khaitan, from Allied Blenders and all the other companies that have reported. Karnataka, there was an MRP cut that happened as well. Maharashtra, going forward, they've looked at resetting their distribution, so that would be a positive. And add to all of this, there will be the India-UK FTA, and this benefits United Spirits more than everyone else because they import a lot of their Diageo brands from United Kingdom itself. Margins are expected to surge because of one, operating leverage. There's a low base and favorable raw material environment. There's stability in ENA prices. Glass prices are seeing some decline. So all in all, 6.5% net revenue growth. This is take out the excise component. EBITDA jumps 36.5%, which implies a margin improvement of 350 basis points, 15.4%, and the net profit grows by about 28% as well. What do you look at in United Spirits? You look at the two segments, Prestige and Above and Popular. Prestige and Above, volume growth between 8 to 10% with revenues of 12 to 14%. Popular, not too much in the company's area of focus right now, 3 to 5% volume growth and 3 to 5% revenue growth as well. What is it that will lead the volume growth? Andhra Pradesh itself will boost volumes by 450 to 500 basis points. The most important thing to track going on from here is the growth outlook for the company under the new leader, Praveen Someshwar, as Hina Nagarajan moves away from Diageo India to Diageo Africa. So that's the one thing that I'll be watching out for. Praveen has a fair amount of history in the beverage space. So obviously, his strategy would be crucial.
Absolutely, Mangalam. Thanks so much for that. So a lot to watch out for in terms of United Spirits. As of now, just managing to hold on to gains of 0.2%. But on that note, we're going to slip into a very short break. And on the other side, Manisha Gupta joins in with Surendra Mehta, Secretary, Indian Bullion and Jewelers Association. So stay tuned in for that conversation.
Welcome back, and joining us on the show now is Surendra Mehta. He's director at IBGA. Mr. Mehta, hi, thank you so much for joining in. And while, of course, the first quarter of gold imports was slightly on a weaker side, we did see it gaining up in the month of March, but that perhaps was ahead of Akshaya Tritiya. How is April looking like, and what's your sense also on May? Before we get on to the SEPA part, what is the overall imports that you see?
Manisha, after the fall in the gold prices, almost from $3,500 to now $3,200, the consumer behavior has been good, and now the buyers are coming in the market. Overall, I can say that after Akshaya Tritiya, the sales have picked up very well as the buyers feel that the prices may again go higher and they may lose an opportunity to buy at the lower prices, because the buyers have already seen in Indian rupees, they have already seen prices almost up to 1 lakh rupees. And now the same gold is available for about, including GST, for about 94,000, 95,000.
Let's talk about SEPA then, and this was allowed in 2022, and we've seen it become quite a rage as we see more and more applications come in every year as well. So now that we have the quota of 180 tons for 25-26 and various rejections as well, as we see, because clearly people have over-tendered onto this one. What is your sense? Would you say that the next season, or perhaps the current season, will be all about SEPA imports, TRQ imports, that is?
Under the UAE SEPA agreement, India is allowed to import 180 tons of gold. About 2,960 applications were received by the government for this quota, wherein we get gold at 1% lesser duty. But 1,400 applications got rejected because they were having turnover below average turnover of last preceding 3 years, below 25 crore. Now, the issue is these applications should not have been rejected, because the government itself have ignored their own public notice of 17th April 2023. Anyway, about your question about the next decade will be definitely about UAE SEPA. We are also entering into agreement with the US, and we understand that this will be something like similar kind of agreement, wherein probably we'll have about 200 tons of gold from USA with 1% lesser duty. So, of course, to answer your question, yes, the next 2025-26 is likely to be more about 1% less duty, maybe SEPA or maybe any other kind of agreement.
Okay, you talked about US, and is that the conversation going on? Are we going to be importing gold from US under a comprehensive treaty as well? I mean, are there any conversations there?
Yeah, there are conversations, but nothing official as yet. But we have understood that this kind of agreement are in place, because that is how we can reduce the overall US tariff impact.
Mr. Mehta, just coming back to what you made a mention of earlier, that 1,400 applications which were rejected perhaps should not have been gone that way. Is there any conversation that you're doing with the ministry?
Yeah, definitely. The quota has been allotted yesterday. We already returned to the ministry that while making an application, the rule was that 25 crore rupees turnover limit was not required. And thereafter, that rule has suddenly been changed. The fact is the DGFT has allotted quota based on 2022 public notice, while in 2023, that public notice itself was deleted. So that 25 crore rupees turnover limit was deleted. The point is, these 1,400 people are very small people. They have paid 1 lakh rupees for an application. So the DGFT has gained 14 crore rupees by rejecting 1,400 applications. This should not have been the case. Had they known it earlier that below 25 crore rupees our application will be rejected, they would not have applied at all.
Also, that money also is forfeited. That also does not come back.
Yes, Manisha.
Mr. Mehta, also, I was just going through one of those applications, and you have to put in a purpose of why you are importing this gold, whether it's for manufacturing, for trading, or both, etc. Is there any information that IBJ also has in sense of how many have put in these applications for trading purpose or manufacturing?
No, these data have not been released by the DGFT, so even we are not having exact those data with us. But to inform you that for the import of jewelry, only 1,700 applications were received. But for import of bullion, which may be for trading purpose or for manufacturing purpose, 2,960 application worth.
Mr. Mehta, what is your sense on the overall imports? I mean, from what we've seen in the first quarter of this calendar year, and as soon as the new financial year is started, we also have this quota now being allotted. Would you say that at these current prices, CEPA is perhaps the first thing to get exhausted right now? Would you see much more golds first coming in via this way?
See, for CEPA to get exhausted, there has to be a level, either no premium in the market or at least some premium in the market. The currently market itself is in discount, so there is no advantage in CEPA. But most of the time we have seen this situation improves after July month, and we feel that CEPA will be the first thing to get exhausted between July to September.
Point taken. Mr. Mehta, thank you so much for joining in, giving us all those details about Indian gold imports and, of course, via CEPA as well. And then we also have seen markets continue to do dealings with US as well.
Absolutely, Manisha. Thank you so much for that. An interesting conversation there. But with that, we're absolutely out of time on this edition of Halftime Report on CNBC TV18. Thank you so much for tuning in. Up next, your business lunch.